The big question on gold and silver investors' minds is whether or not monetary policy in the US and abroad can lead the precious metals into a prosperous 2022. While the answer may not be as obvious as it may seem, we're here to discuss why with Chen Lin. He is the president of Lin Asset Management and the founder of ChenLinPicks.com. Chen, welcome back to the show.
Thank you, David. It's a pleasure.
Pleasure to have you. Happy New Year. Happy 2022. Before we talk about this coming new year, let's talk about last year. In 2021, gold and silver's performance was not good, as you know. So both precious metals were down by about 7% and double digits for silver, actually. So walk us through why you think gold and silver did not perform as well as some investors may have expected despite higher inflation, despite continuously loose monetary policy, and some would argue despite a recovering economy that should be good for industrial metals like silver.
Yeah, that's a very good question. Actually, there's multiple fold. Okay, first on gold. Gold, what happened in the past 10 years is when Fed started tapering 2013, gold started to drop sharply. So the last year was a tapering year. So I was kind of expected gold would drop. So I was waiting for the gold to drop and into tapering to buy. But unfortunately, due to the rapid rising interest rate, even the tapering was a bottom, but it quickly went down because the inflation was so high. So the Fed was turned to hawkish at the end of last year. So let's look back to the history. Then the Fed raising interest rate will be another buy point. So we can talk about that. That will be sometime this year.
Okay. So an interesting thing you wrote in your recent Outlook report for 2022 is that there will be a divergence in monetary policies between the US and China, currently the two largest economies in the world. So next year, the Fed, like you wrote, the Fed has signaled that they will be raising rates 2 to 3 times. It depends on how you perceive or interpret the dot plots. China is pursuing a different monetary policy. And you noted in your report that the last 2 times this happened, when there was a divergence in monetary policies between China and the US, it was in 2014 to 2016, and then once more in 2018. Both times gold bottomed. So first of all, explain why this divergence is happening, and then we can go into gold's performance.
Yeah, that's a very good point. The divergence in China, the monetary system has no choice but to cut interest rate. Right now, there's a big lockdown in Xi'an. This is 13 million people were locked down. They cannot go anywhere. We already heard from Samsung, for all the other companies whose operation was impacted in Xi'an. And yesterday, there was another case local case reported in Shanghai. I hope that won't be a very, very serious. So China has been very heavy-handed policy. When there is 50 cases, they lock down the whole city. So you can see, obviously, Chinese economy is going down. And then secondary, we talked about Evergrande last time. It's getting worse. And the property market is losing steam. So there's multiple factors coming. The Chinese government has no choice but to cut interest rate. They already cut it late last year. They will be continue cutting into 2022. And what I said in my annual report was that because United States raising interest rate, China is cutting interest rate to go just complete opposite. This happened twice in the past decade. In every cases, gold take a sharp U-turn and then move much higher. The reason is United States and China together is almost 50% of the world economy. Okay, the third largest is Japan, which is about 1/3 of China and 1/4 of United States. So those two are two largest economy. One cutting, one raising. They diverging so much. We'll soon find out they will be impact each other, and then there will be somewhere in the middle. So the Fed, despite how hawkish they sound in the past few months, when they start raising interest rate in 2022, we'll soon find we're facing a slowing world economy. Mm-hmm. That means they will probably stop raising interest rate sooner than they expected. There were talks about recession in 2023. So if Fed really want to raise interest rate hard, this year we could head into recession. So think about that. That's another round of QE, more interest rate cut. That's where gold will be.
Let's talk about your outlook on potential recession in just a minute. But going back to China, it's not just China that's cutting interest rates. Actually, several central banks other than the US are still dovish. Maybe they're not cutting interest rates, but they're maintaining their current interest rates. They're not as hawkish as the Fed. With divergence happening between the Fed and other central banks, wouldn't you expect the US dollar to strengthen on higher interest rates in the US and not abroad?
That's a very good point. Initially, US dollar will strengthen, but there's so much US dollar can strengthen this way, right? The sooner or later, US dollar will be peaking and then coming down. So that's what I'll look for the gold coming to 2022. Initially, we may have some weakness. Today, we'll have a down day, big down day, and then they will find some bottom during 2022, and then we have a rebound into 2023. That's my main outlook for gold.
Okay, a rebound. So let's talk about Fed policy. First of all, you mentioned in your report, like you explained, you don't think the Fed is going to be hawkish forever. You think that the Fed will raise rates potentially in 2022, but then become more dovish again in 2023. Why the change in attitude, Chen?
Well, one of the happened to be, I explained in my report, the Fed in 2022 happened to be a lot of hawkish member of the Fed in the voting, who can vote. And 2023, just opposite, there's more dovish member of the Fed. So that's also another very good setup. So this year will be more hawkish, and next year will be more dovish. That couldn't be better for gold into 2023.
Okay, so how do you expect gold to perform then in 2022? Do you think it can rally in 2022, or do you think it will only start to move higher in 2023 when the Fed turns back to being more dovish?
Market is anticipate, right? As soon as the market sees the Fed cannot raise interest rate, the gold will be zooming, right? So it's market is not just wait for the Fed to make an announcement. Market sees what's going to happen with the Fed. That's what happened in the 2021. I think that will probably going to be happen in 2022. So the first is just let the Fed raise the interest rate. Okay, they want to raise in March, fine. Raise in April, that's fine. The sooner the better. The sooner people will realize, that's probably we're getting close to the end than the beginning.
The end of what, Chen?
The end of the interest rates. Right.
Okay.
So that's, for me as a gold investor, I'm kind of anxiously waiting for them to carry out their commitment. They want to raise the interest rate, let's raise the interest rate. Okay, they want to raise in April, they say the possibility, let's do it. Let's see.
Well, Chen, I've heard that argument before from other economists that they cannot raise interest rates or at least sustain higher interest rates for a considerably long period of time. But why is that, Chen? If you look at inflation, it's at the highest level in nearly 40 years. What other tools do they have to fight inflation?
Well, the bottom line is the Fed raise interest because they have to. They basically want to have sounds like they're credible. Actually, the world is so interconnected. Okay, the Fed raising interest rate can slow down inflation a little bit, but it's not the main, would not be the main mechanism to slow down inflation, right? Inflation, there's two main deflationary factors. One is the technology. Technology is deflationary. I think they will come to become deflationary sometime this year. So the price, they will push price down. And second deflationary force is China. Right now, with the trade war between United States and China, with no end in sight, I don't think that argument will be valid. So there's nothing Fed can do about that. So so in a sense, yes, inflation is very high, and I expect to come down because of technology. The chip shortage, auto shortage, those actually will come down this year.
Is that going to happen? Okay, sorry, please continue.
However, because the trade relationship with China, the trade war will continue. That will continue to be an inflationary force. There's nothing Fed can do.
Right. Okay, so there's nothing they can do. Are you saying then inflation is just going to continuously run hot for now until technology brings the prices back down? There's nothing anybody can do right now, right?
Right. I think the inflation will come down on its own. It probably will come down in the second half of this year. Okay, Fed will start raising interest rate maybe as soon early as April. Okay, and then we'll see inflation come down, and Fed will say, "Oh, declare victory! Look, I raised interest rate. Inflation came down a little bit." Right. So,
But
it's
you're
at least
saying
the right
inflation will
direction.
come down anyway. Even if they don't raise interest rates, it will still come down later this year, right?
Yes, yeah, it's pretty obvious if you look at the China, because China first came out of the pandemic, right? China inflation was very high immediately after pandemic. That's about 2020, in the summer 2020, China inflation very high, and then immediately came down. Growth start came down. So they go through that curve. United States maybe a year behind that. So yeah, I see inflation will come down uh, pretty significant, especially from the chip shortage related, chip related, semiconductor related, the price will come down. Like, for example, key component, silicon, right, mostly used in solar panel already came down hard in China, right?
Yeah.
Because there's a response, right? The price is high, people produce more. And then another thing I want to say is last year was a very disappointing year for silver because solar panel component shortage. Okay, and this year, 2022, it seems to be the component shortage is mostly gone. So there will be a very strong demand of solar panel, which is number one industrial use of silver. So I expect silver to be strong for the rest of the year. I also expect platinum PGM group to be strong because first, if chip shortage coming down, automobile production coming up, that will be more demand for PGM. And second, South Africa mine contract, platinum mine contract is up to renew this year. So, so usually that's uneasy. The strike is quite likely if you talk to people in industry. I don't want to speculate. If there's anything happen, that will bring up the platinum group, platinum and other precious metals.
Chen, okay, so let's talk about inflation for just one more minute. Now, you mentioned that inflation is likely to come back down, or in other words, maybe transitory for now, later on this year. Wouldn't that be bad for gold?
Oh yeah, initially will be a headwind. I agree that is initially, especially in the first half of the year, will be some headwind because there's a relatively high inflation, and then the whole Wall Street is expecting Fed going to raise interest rate. You look at the annual report of the end of last year, almost every bank uniformly are bearish on gold. So yeah, there will be some headwind for gold in the first half. And I would, just like the previous divergence between United States and China, I expect into this year, into 2020, we found the bottom of gold.
Okay. Real interest rates then, the nominal rate minus the inflation rate, currently still in negative territory, but as you know, gold responds more to the delta, the change of real interest rates more than a level. So where do you see this change happening this year? Do you think real interest rates will still stay at the same level as currently, or do you think it will move either higher or lower?
Oh, the real interest rate initially in the first half of the year likely to go lower. Okay, that's a two factor because Fed is raising interest rate, and also the inflation I can see we are peaking, probably start coming down. But I'm not saying we'll go to negative inflation rate, okay? But I'm just saying we'll come to a lower level. Okay, so that's what I expect.
Okay, excellent. Now, you mentioned also in your report that biotech is a sector that you're looking at and could potentially have tailwinds as well. Tell us about that.
Right, last year has been the worst year in biotech in the past decade. Okay, I've seen a lot of funds just sold out everything, completely liquidate. And there's some very famous biotech fund that down 30-40%. It's unthinkable in the past decade. So that's actually tax law selling creates some very interesting opportunities into this year. So that's another sector I follow. So I like gold and I like biotech.
Well, can you give us a biotech stock that you like and tell us why you like it?
Oh, yeah, there's a couple of biotech I mentioned in my report, but for example, I can say the first actually came down today because of the tax reason, TCDH, I see that. It's a very unique company. It used to trading at $40, it went down to $4 last year. That's when Steve Cohen, the famous hedge fund, was buying. Actually, I started buying first, and I noticed Steve Cohen was buying. So we had kind of competing to pick up shares at around $4, and then hit $10, almost $10, and then came down because today is the first trading day of the year. People tend to wait for
what's the ticker again?
First day to take profit. It's TCDA, Tom, Charles, David, Apple. So what it does is CKD is a chronic kidney disease. Okay, it's very, very deadly disease, and it's one of the largest market in the world. The company tried to get accelerated approval. That when the stock was $40, but rejected by the FDA. At $4 last year, we're trading at cash actually. So, but right now it's about $8 or $9. I think it's still very, very good value. It's probably will go back to FDA next year. And I fully expect the stock fully recover to the old high ahead of that. And then as always, I recommend you to take some off, right? So when they go up so much, you should take some off to play with the house money. You don't take that risk because FDA has been very tough on the CKD. So not many company got approval in the past year. So even some company got a European approval, Japan approval, China approval, still rejected by FDA. So it's very tough, but that means barrier of entry is also very high. So that's something you keep in mind.
Okay. And finally, going back to the resource sector, what do you prefer, the juniors or the seniors?
I have both junior and seniors, and I can see one of the company I'm very excited is called Firefox. It's in Finland. They're exploring there's a big discovery, right? In northern Finland. They're the last one, still holding a very decent land position, and then their market cap is only trading a few percent of Rupert, which already made discovery. They just a little bit off. You can see the map. Rupert, Orion, and then Firefox. There are three companies just on that area, and all have a very big land position. One is 1 billion, one is 100 million for 30% of the land that's Orion, and then whereas Firefox is only 20, 30 million. So if they just need to hit one hole, almost regardless of gold price, because this is a major discovery, the stock can go up a lot of meaningful.
Excellent. Chen, I want to thank you so much for being on the show today. Happy 2022, and thank you for your outlook.
Thank you. Happy 2022. Hopefully this year will be the better year.
Hopefully, we'll see. And for investors watching Kitco, happy 2022 to you as well. Thank you for joining us, and we'll look forward to giving you more coverage this year.